Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to what day are we? We're Wednesday. We're Wednesday, the 19th of March, 2025. And welcome to the Bull versus Bear webinar with Trade Day. Steve Miley here on the call. So welcome, everyone. We're going to go for our usual regular run through in here today. We'll take a look at the calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires. What are those important fundamental macroeconomic central bank geopolitical events which are shaping financial markets right here, right now? And we'll dip in, take a little look at the charts. Where are the potential trigger points? What are the important levels potentially? And where are the directional themes for the markets you guys are trading, primarily the US equity indices, the ES, the S&P 500, and the NQ, the NASDAQ. So we're going to run through all that with you now. So first of all, let's look a little back before. Actually, I'm going to dupe this tab in here, and we'll look back before we look forward in here. So go to yesterday. Generally speaking, not too much of a significant load, slightly better than expected on the data we did add from the US. Capacity utilization in industrial production numbers in here slightly better than expected, so slight positives there. Also the building data, housing starts data in here, you can see slightly better than expected. So looking back to yesterday, looking into today though, really all eyes are going to be on the Fed. It's Fed day. You can see in here the Fed decision is on Wednesday. So yeah, there you go. So 1300 Central Time, 1 p.m. 1400 Eastern Time. Remember now you can't foul through trading through these events because we halt trading 2 minutes before and after this release. So 2 minutes before and after this release, we'll halt trading. You can't foul anymore on trading the data because you can't trade the data. We shut off all markets during that time in here. So we've got that coming up at 2:00. Really, the interest rate decision is kind of negligible in here. Is the whole market, no one expected. If we go to the dot plot chart in here, you can see 99% chance of unchanged. So very little chance we're going to see any change. But what we're really looking at is in here. So the economic projections and the the economic projections and the interest rate projections, okay, that we get. This is the dot plot chart. So what we're looking at is it going to tell us something different to what we're seeing here? So and particularly at the year end. So year end in here, we're looking at somewhere between, so the most of the bets on here at the moment, 37 to 400, that's 50 basis points down, okay? But we're pretty much, we've got a 50% chance. You had all these up in here, it's about 50, 55, 56, or whatever it is percent in here, chance that we're going to get 2 rate cuts before the end of the year. But potentially, though, in here, so this is now 40 odd percent in here, that we get more than 2 rate cuts by the end of the year. So it's between 2 and 3 rate cuts. So we're going to be looking at the dot plot chart to see, according to the interest rate curve, and this is the interest rate curve, this is what this is reflecting here, this CME FedWatch tool, is we are looking for whether that we're going to see more or fewer. What are the Fed telling us they are expecting by the end of the year? And at the moment, we're looking for that first rate to likely come around June. So we've got 38% chance still unchanged in June. Certainly by July, only a 26% chance that we don't have a rate cut by July. So we're looking at June, July for the first rate cut, and then 2/3 rate cuts by the end of the year. So the dot plot chart is what we're going to be looking at in here. So question with Rob: if someone has a position on CL, for example, do you halt the trading prior to the usual Wednesday data release? So we're not halting it on the oil data anymore, okay? And we're not failing on the oil data. We probably need to rewrite that up in here, but at the moment we're only failing on the main economic data. So CPI on the employment reports and on the Fed minutes and the Fed meeting, Rob. Okay, so CL, we're not failing you, but I would strongly recommend you don't trade over the various oil data that we have released out of the US. I wouldn't be trading over those anyway. As you know, if you're an oil trader, it can be extremely jumpy over those. But we're not shutting off the data. We don't halt the trading on the oil data. We're only halting the trading on US CPI, US employment report, Fed minutes, and Fed meetings. Okay, just to make that clear. Okay, so what do we have on the macroeconomic side? We have overnight or from yesterday, in Putin here dismissing Trump's call for immediate ceasefire in Ukraine. Bit of a rebuff to Trump. It'd be interesting to see. Trump's tried to put a relatively positive spin on it, but really it's a rejection. Volodymyr Zelensky said the call showed Russia isn't ready for peace. Further bombings continuing overnight in here. They've kind of agreed to an infrastructure a halt, but no sign of it letting up in here. So Rob's saying Super Saints are aim to be out of CL during news, but good to know, not an automatic fail yet. More developments. Watching out for further developments. Anything from Trump potentially on that ceasefire. Markets obviously snapped a 2-day winning streak in here, but are kind of gone back into consolidation mode. No surprises ahead of today's Fed meeting. Nvidia, so is Nvidia boss losing his Midas touch? Popped an article out on this. So Nvidia CEO loses stock kingmaker status as tout falls flat. So they had their key event in here, keynote speech in here. Mark couldn't turn the market positive over the turn Nvidia positive over that release in here. And what else is anything? Google parent buying to acquire cybersecurity Wiz. Not too much more in here that's going to really impact us. So stocks stall as traders look ahead to Fed meeting. So also we had that rebound in here Friday through Monday, slight setback yesterday, slight rebound in here on the futures in here overnight, futures edging higher as investors await Fed decision. And Powell's remarks set to be scrutinised as Fed set the whole rate. So maybe some kind of clue as to also not alongside the dot plot chart, which is going to be important in here. You see, look, first rate cut now expected in September. Well, depending on what you're looking at. So Fed funds upper bound rate in March, December survey. So depends what you're looking at, whether it's the interest rate curve, whether it's on surveys. So the surveys in here saying economists now 2 quarter point reductions this year expected from September. The Fed tool's telling us something different, probably looking for June, July. By September, it's pretty much, it's the same as in June in here. So there's July. There's September. So by September, it's kind of nailed on that we get one, but there's a good chance that we get one in July, but potentially even June. So we'll see a little bit. No, this is all going to change, no doubt, post Fed. So it's not only the dot plot chart, but also what Powell says. Is he going to talk about, what kind of markers, what are they looking for to change that maybe will prompt them to cut early? What kind of data are they looking at? Are they looking at the unemployment rate? Are they looking at growth rates? What are they focusing on? Are they worried about inflation potentially ticking up because there's the uncertainty and how tariffs will impact? So looking for both potential for both recessionary concerns and what the recessionary markers are, but are there still ongoing concerns about inflation ticking up because of tariffs? So it's going to be interesting to see what he has to say on his remarks and during the Q&A. Central banks take the limelight briefly. So not only do we get the Fed, but then we also get Thursday, we get the Bank of England and the Swiss National Bank, the SNB. So we're getting their meetings as well within the next 24 hours. So I've already focused on that. Nvidia CEO loses stock kingmaker status. On the overnights, what have we seen? Well, Asia fairly quiet. 0.25% down for the Nikkei, about 1/10 up on the Hang Seng. European exchanges mixed as well. Little change on the UK FTSE, down 0.15. The DAX, the German DAX, down about 1/3%, but the French CAC up just over 0.4. And US stock futures slightly rebounding in here. The S&P up 0.25%, 0.3% up for the Nasdaq going into today. We've already looked through the CME Fed Watch tool. We're going to park that. Bond markets are paralysed in here at the moment. So we had that big move to lower yields in here from the beginning of the year right the way through February. And then from the beginning of March, we kind of had this pushback to slightly higher yields. And then it paralysed in consolidation. Look, really gone nowhere in here over the last 1 to 2 weeks. Market really waiting now maybe for the Fed today. Could easily see a break to here to higher yields or a break to lower yields. So in breakout potential at the moment. And again in here, look, if you look at what we're talking about in our reports on the market chartist reports in here, we're saying cautiously bullish. So we do go into across the board in here bullish, but you can see in here that these markets very much sideways, right the way across the interest rate curve, 2s, 5s, 10s, and 30s in here. Potential topping structures, so higher pointing to potential reversals down through these trend lines, which could take us to lower prices, higher yields. So at the moment, the bias still remains for higher prices, lower yields, but there is potential for us to move in the opposite direction, and that could easily get resolved as we go through the Fed today. And on the equity side, as you see in here, we've had this big sell-off in here. We had the rebound Friday through Monday, setback on Tuesday. This is a potential basing pattern for both the S&P and NASDAQ. And again, look, staying wary on shorts into Fed. Slips back down, but staying cautious heading into Fed. We remain bearish because the main trend is bearish. However, there is a risk that this is a base forming, and we'll take a look at that. As you were on there, Robin, talking about oil. Oil in here, again, because of the slide since the beginning of the year, fairly similar price action to stocks, actually, sliding from the beginning of the year, bearish trend, but over the last in the last few sessions in here, trying to recover, setting back yesterday, but then real risk, you've got this downtrend line, maybe a reversal back up through that downtrend line that comes from the beginning of the year, creates a base in here for oil. If we go and take a look at, I think these are the critical things we're looking at in here as we go into today. We have two kind of markers on the daily charts and on the intraday charts. If you look on the daily charts for both the ES and the NQ on the daily charts, you'll see those EMAs. Okay, these green lines are 13-period EMA. I really like this as a trend tool. In here, you can see when we were in the uptrend here, when we reversed, that was the end of the uptrend and the market was sideways. Now we're in the downtrend. A close above that, and that would effectively mean a close above the high point in here from the last few days. This is the high point from Monday. A push above Monday's high in here would and a close above there would signal a base, and then we would expect the market to at least go into more sideways with potential to the upside. Same thing in here for the ES, okay? And you can see that 13-period EMA, if we get above Monday's high, it's going to be, we're going to be closing above Monday's high. We're going to be through that 13-period EMA. And again, if we go and look now on the intraday charts, we'll stay with the ES for now. You can see we've reversed this downtrend line. Okay, this sharper downtrend line that comes in here from, where are we? Need to get the dates for you. This comes from the beginning of March. However, this more gradual trend line that comes from the end of February, we're not through that yet. If we get above again Monday's high, we're going to be reversing that trend line. And then also this becomes a better basing pattern. This looks like a basing pattern forming. Remember, on our reports, we're still cautiously bearish, but cautiously. There's that equivalent downtrend line. Sorry, that's on crude. There's the downtrend line on the ES. There's the, so we haven't got the downtrend on the NASDAQ in here. And then, you know, it's no coincidence that obviously crude is kind of following at the moment equity markets. But if we go and take a look at both the ES, we've got this downtrend line. If we get above Monday's high, we're going to be reversing that downtrend line, and we're going to be pushing through that 13-period EMA. Same story on the NASDAQ in here. For the NASDAQ, this is why I didn't put it on. We've already reversed that downtrend line, okay? That downtrend line on the NASDAQ, the equivalent downtrend line, it would be down through here. We've already reversed above that. So we're already above that trend line. We've got this kind of basing pattern. If we get above Monday's high, again, Monday's high would be a flag that this is a base in here. Nothing's going to happen pre-Fed. I think we're wait and see mode ahead of Fed. If we can get above Monday's highs on the ES and the NASDAQ, I think we could see, we've got a lot of shorts in here. Fast money is short. Hedge funds are short. We could easily see a move above Monday's high if we get some kind of indication for the Fed that they may be more willing to start to cut rates if necessary. Any kind of indication on that, any kind of indication on the dot plot chart that maybe they're closer to maybe 3 rate cuts rather than 2 rate cuts, anything like that could see a push above Monday's highs. And then I think we could easily run stops and the market could significantly push higher. So I think Monday's highs are the key line in the sand in here for a potential shift in theme. If we get the opposite direction, we're down through the overnight lows and then through the lows so far this week, we could see a significant extension to the downside as well. I'm not, at the moment, the underlying theme, as it says in the reports in here, remains bearish, but there is potential for a bullish shift. But if we break back down through recent lows, then it's all looking really negative again. So it's a bit of a wait and see into the Fed. I'm going to wish you all a great trading day, guys. Take care, stay safe, and we'll be back with you actually be Duncan with you tomorrow for another bull versus bear webinar to take a look at what we get post-Fed. Take care. Bye.